"People like you don't bank here." That's what the teller said. Then, without waiting for a response, she dropped the ID card on the floor like it was trash. It landed with a clack that echoed through the marble floors of Strathmore Union Bank. Nobody gasped. Nobody stepped in. They just watched. Eyes turned. Conversations died. The pianist in the corner kept playing, oblivious, as if humiliating a black woman in broad daylight was just another Tuesday in Boston. Celeste Monroe stood still. 1 beat. 2. She bent slowly, picked up the card without a word, dusted it off with the inside of her coat, and looked up, directly at the woman behind the glass. Not angry, not broken, just still. The teller didn't flinch. She was already typing, her tone flat. "Do you have an appointment?" Celeste said nothing. She simply turned and walked away. The room moved on like nothing had happened. But something had. It had started out simple. Celeste had entered the bank quietly, just another woman in a gray coat, hair pulled into a no-nonsense bun, carrying a slim black folio. No assistant, no entourage, no flashy jewelry. Nothing that screamed wealth. Nothing that said power. And that, perhaps, was her first mistake. She walked across the pristine lobby, past the gleaming glass walls, the tasteful oil paintings, the marble counter where executives were often escorted into private lounges. She waited. The receptionist, a pale woman in a pastel blouse, didn't glance up. "Excuse me," Celeste said calmly. No reply, just the soft click-clack of painted nails over a wireless keyboard. "Excuse me," she repeated. This time, the receptionist raised her hand. Not to greet her, not to help, just raised it, palm out. "Stop. Wait," like she was talking to a child or a problem. Celeste's shoulders squared, but her expression remained unchanged. Moments later, a white couple entered behind her. The receptionist's eyes lit up. "Oh, Mr. and Mrs. Keating, your private room is ready." She ushered them past Celeste without a second glance. Celeste took a seat near the window. She waited. 5 minutes. 10. Then she stood and tried again, this time directly with a teller named Heather. Blonde, mid-30s, acrylic nails, a permanent pout. "I'd like to open an operations account," Celeste said, placing her government ID and the check she brought on the counter. Heather barely looked at it. "Business or personal?" she asked, annoyed. "Business. What kind?" "A non-profit subsidiary," Celeste replied. "We're funding a pilot program." Heather cut her off with a wave of her hand. "Do you have someone who can walk you through this?" "I don't need assistance," Celeste said, measured. "Just to open the account. The paperwork's complete." Heather eyed the check like it was counterfeit. Then, with practiced disdain, she pinched the ID between 2 fingers, held it up to the light like a dirty napkin, and let it fall. Let it fall. On purpose. Celeste heard it land. She also heard the silence around her, and beneath that silence, the unspoken, "You don't belong here." It wasn't said aloud. It didn't need to be. Back at her seat, Celeste clutched the ID in her hand, her fingers tight around the edges. Her palms were dry, her breathing even. But her mind? Her mind had already left this lobby. It was moving through folders, databases, protocols. Because while they saw her as just another black woman asking for too much, Celeste was so much more than they assumed. She wasn't just the CEO of Ethica Bridge Alliance, a national ethics compliance firm that handled high-level interbank risk assessments. She wasn't just the woman tasked with approving or denying final merger clearances for financial institutions. No. Celeste Monroe was one of the co-architects of NIBES, the National Interbank Ethics System, the very framework this bank, and 37 others, relied on to maintain legitimacy with the Department of Treasury. And the bank she was sitting in, Strathmore Union, they were days away from finalizing a $2.1 billion merger, a merger that needed NIBES clearance she controlled. But no one here knew that. To them, she was just another face, another form to deny. Another woman of color asking to be seen in a place where visibility was selective. She could have revealed who she was. She could have pulled out a card, called for the branch manager, named the merger in question, and watched everyone scramble to apologize. But she didn't, because Celeste didn't raise her voice. She didn't beg, she didn't make threats. She built systems, and when those systems spoke for her, they spoke in irreversible language. So she stood up, adjusted her coat, slipped her ID back into her folio, and walked out. One step, then another, as if nothing had happened. But it had, and very soon they would find out exactly what. The door closed behind her with a soft, metallic click. No slamming, no drama, just the quiet sound of dignity leaving the room. Celeste Monroe stepped out of Strathmore Union Bank and into the gray Boston afternoon. The air was sharp, but it wasn't the cold that raised goosebumps along her arms. It was the stillness, the weight of something larger pressing down on her chest. She didn't cry. She never did. Instead, she took a slow breath, adjusted her coat collar, and walked down Commonwealth Avenue like nothing had happened. But something had. Something was about to. By the time she reached her office in Cambridge, dusk had turned the city gold. The traffic hummed low beneath the third-story windows, and the exposed brick of the Ithaca Bridge building glowed with a quiet pride. Not flashy, not sterile, just built to last, like the woman who ran it. Inside, the lights were off. Most of the staff had already gone home. Celeste preferred it that way. She didn't need comfort. She needed clarity. She stepped into her glass-walled office, dropped the folio on her desk, and locked the door behind her. No calls, no texts, no outside noise, just her and the system. She booted up the console. The screen flickered once, then glowed blue. NIBES, National Interbank Ethics System, the very framework she'd spent the last decade helping to build. It had started as a radical idea. What if trust in the banking system was no longer just about credit scores and balance sheets? What if it was about conduct, bias, how people were treated at the most basic level? Ethics couldn't just be a line in a policy manual anymore. They had to be measurable, trackable, and when needed, enforceable. That's what NIBES was for, and today, it was time to use it. Celeste sat, rolled up her sleeves, and placed her right index finger on the biometric pad. A soft chime confirmed her identity. Level Sigma access granted. She leaned forward, eyes locked on the dashboard. Rows of active transactions flickered on screen. Ongoing reviews, pending audits, merger assessments, regulatory alerts. And right there, under Pending High-Value Mergers, she saw it. File number 4217 MG Strathmore Union Bank I Belmont Trust. Total value 2.1 B. Status Ethics Clearance. Final phase. She clicked. The file opened with layers of documentation. Financials, client retention records, past fines, bias training history, internal complaints, all clean, all predictable, all surface. But Celeste hadn't come this far to just skim the surface. She toggled to the internal behavior flagging system, a back-end module only 5 people in the country had access to. From there, she opened a hidden tab marked Clause 13E, Public Incident Reporting, Active Client Discrimination. It was a clause most banks barely knew existed, but it was written for situations just like today. Any public-facing employee conduct that demonstrates classist, racist, or prejudicial action toward a verified client may initiate an automatic ethics freeze for the associated institution, pending review by governing ethics authorities. There it was. Clean, sharp, no gray area. And it had her name on the authorship line. Celeste didn't hesitate. She typed, Observed Discriminatory Incident, 3:16 p.m., Strathmore Union Bank, Commonwealth Ave Branch. Client ID accepted, examined, and discarded without process. No apology offered. Staff conduct in violation of established trust standards. She added the optional remarks section. Her fingers hovered above the keyboard. Then she typed, slowly, clearly. This was not personal. This was systemic. The teller didn't just see a black woman. She saw less. At the bottom of the form was a single button. Flag institution, pending freeze. Celeste clicked it. The screen blinked once, then turned red. Alert issued. Ethics hold initiated. Institution status, high-risk bias exposure. Just like that, the merger file grayed out. No one could move it forward now, no matter how much money was on the line. Celeste leaned back in her chair. No triumph, no smirk, just breath. This was why she built the system, not to punish, but to protect. People thought power was loud, but real power, the kind that changed systems, was quiet, unshakable, impeccably timed. The next morning, the tremors began. At 8:14 a.m., the internal legal team at Strathmore Union received an alert. Merger suspended pending ethics clearance audit. Do not proceed. Contact NIBES. By 9:30 a.m., Belmont Trust's board was panicking. Their legal team couldn't reach anyone. They had sunk weeks into this deal. Millions in prep. Media statements lined up. ESG investors briefed. And now, frozen. All because someone had triggered Clause 13E. Back in Cambridge, Celeste stepped into her office like it was any other day. Her assistant greeted her with a coffee and a cautious look. "Good morning, Ms. Monroe. You've had a lot of voicemails." Celeste smiled politely. "Ignore them." She opened her laptop. Another ethics alert had come in. A minor infraction from a partner bank in Ohio. She handled it quietly, methodically. Because for her, today wasn't about revenge. It was about reminding an entire industry that how you treat people when you think they're no one is the truest measure of who you are. At exactly 9:42 a.m., the email landed. Subject: urgent. Ethics freeze notification from NIBES Oversight Board to Belmont Trust Executive Legal Team. Your pending merger with Strathmore Union Bank has been placed under temporary ethics hold pursuant to Clause 13E of the National Interbank Ethics System. No further activity may proceed until a formal review is completed. Estimated delay, indefinite. In the silence of Belmont's 34th floor boardroom, one word rang louder than the rest. Indefinite. Chairman Robert Lansing read the line twice, then again. The air inside the room, once electric with confidence, flattened. Across the glossy conference table, phones lit up. Screens blinked red. Junior staffers whispered. Senior execs stared into space, stunned. No one understood what had happened, or worse, who had triggered it. Meanwhile, Strathmore Union Bank's downtown Boston branch was running like it always did. Fresh flowers in the vases. Espresso served in the private lounge. Suits arriving in black cars. On the surface, nothing had changed. But inside the executive wing, full-blown crisis. At 10:06 a.m., Strathmore's General Counsel, Marissa Green, burst into CEO Richard Callahan's office, her tablet in hand and face white as chalk. "You need to see this," she said, without pleasantries. Callahan looked up from his morning paper. "What now?" "Clause 13E, she said. He blinked. "That's not even real. That's some hypothetical protocol they wrote for PR. No one's ever used that." "She used it," Marissa said flatly. Callahan frowned. "Who?" "We don't know. Yet," she admitted. But the ethics file was triggered from the highest level of NIBES. Level Sigma. The blood drained from his face. "That's federal tier access." "Yes," she nodded. "Which means whoever flagged us." built the damn system. By 10:20, the phones in Strathmore's PR, investor relations, and compliance departments were ringing non-stop. Journalists hadn't caught on, not yet, but institutional whispers were starting. BlackRock, Vanguard, State Street. ESG analysts were suddenly rechecking Strathmore's entire ethics history. Belmont's acquisition team was quietly pulling documents from public folders. And one smaller investor, Convergent Capital, had already withdrawn its 18% stake from the pre-merger reserve. The street smelled instability. And in banking, instability was a virus. By noon, the executive floor of Strathmore Union was on lockdown. Inside the largest boardroom, behind closed doors, the top 10 decision-makers sat around a table that suddenly felt too big, too exposed. They threw around guesses. Maybe it was an internal whistleblower. Someone from the compliance team? Did we miss something in the last audit? But no one said what they were really thinking. Who did we offend badly enough to make them use a nuclear option? Marissa finally broke the silence. "There's a name floating in the review chain," she said carefully, flipping her screen around to face the group. "Celeste Monroe." A few heads cocked. One executive narrowed his eyes. "Sounds vaguely familiar." Marissa's voice dropped. "She's not just on the NIBES oversight board. She's one of the system's co-architects." The room stiffened. "Wait," Callahan said slowly. "That's Celeste Monroe? The one who designed Clause 13E and signed off on every ethics provision we're now violating." They all looked at each other, and suddenly, it clicked. Callahan looked toward Langston, the regional VP who'd been overseeing the Commonwealth Ave branch. "You said something about a client issue last week?" he asked tightly. Langston hesitated. "There was a woman," he said. "Black, early 40s. Came in asking about a business account. Heather handled her. It was a nothing situation. She didn't have an appointment." Marissa stared at him. "Describe her." "I mean, she was dressed modestly. No staff. Looked like a mid-tier non-profit type. Honestly, I thought she was just..." He stopped himself. Just what? Just another black woman wasting someone's time? He didn't say it, but the silence in the room said it for him. Marissa opened the internal access log from that day. There it was. Timestamp, 3:16 p.m. Action, customer interaction. Ethics flag triggered. Flagged by Level Sigma user system. Comment. Client identity disrespected. Public bias confirmed. Institutional conduct in breach of core trust standards. And beneath that, a single line. Submitted by C. Monroe. No one breathed. Callahan stood slowly, walked to the floor-to-ceiling window, and stared out over Boston's skyline. "Jesus Christ," he whispered. "We humiliated the one person who could end our deal with a keystroke." No one corrected him, because it wasn't just a deal. It was 2 years of planning, 300 jobs, 4 investment partners, $2 billion, gone. Not because of a scandal, not because of a headline, but because they disrespected the wrong person. Elsewhere, in a quiet office back in Cambridge, Celeste Monroe sipped her tea and read a brief update from her assistant. Convergent Capital pulled their funding. Belmont Trust's legal team is requesting a meeting. Strathmore has gone radio silent. She responded with 2 words. Let them. Celeste wasn't angry. That emotion had passed days ago. What she felt now was resolve. This wasn't about her ego. This wasn't vengeance. It was about message. In a world where bias was often subtle, private, and invisible, she had made it public. Permanent. Unignorable. They had thought she was nobody. Now they knew better. The next morning, news broke. Not through tabloids or outrage-fueled headlines, but in a one-line legal disclosure posted by Belmont Trust. Our merger with Strathmore Union Bank is on hold pending regulatory ethics review. That was it. But to anyone in the financial world, that one line was a fire alarm. Dozens of phone calls, dozens of questions, and just one name rising in every conversation, Celeste Monroe. She'd said nothing publicly, no press release, no interview, no post on LinkedIn. But inside boardrooms, courtrooms, and executive lounges across the country, everyone was now asking the same question. Who is this woman? The first real headline didn't come from Bloomberg or CNBC. It came from a small business ethics newsletter called Governance Today. The title was short, subtle. Who is Celeste Monroe? And why is Wall Street so quiet this week? Most people ignored it. But inside the legal departments of 4 major banks, it set off silent alarms, because they knew. They'd heard whispers of her name from a flagged system audit, an emergency freeze notice, or a panicked call from a partner who suddenly lost funding. And now, someone had dared to ask the question out loud. Who is she? 3 days earlier, no one in the industry would have flinched at her name. Celeste Monroe wasn't on magazine covers. She didn't do TED Talks. She didn't host summits or flash her credentials on cable news. But she didn't need to, because the power she held wasn't public. It was structural. It was the kind of power you only knew about when you triggered it. At 7:41 a.m. that Monday, Howard Billings, lead partner at Waymore Equity, was already 2 coffees deep and dialing his favorite compliance contact at First Bank. He didn't bother with hello. Tell me what you know about Celeste Monroe. A long pause. Then, you too, huh? By noon, 5 firms had run background queries on her. But what they found wasn't the usual LinkedIn fluff or PR sculpted bios. They found nothing. No recent interviews. No conference appearances. No ego trails. Just one consistent entry across multiple systems. Federal Ethics Oversight Authority, Level Sigma. And below that, co-architect NIBES, National Interbank Ethics System. One compliance officer at Sterling Partners said it best in a group chat. She didn't climb the ladder, she built the damn elevator. By the end of the day, the finance world was in silent panic mode. Not because Celeste had said anything publicly. She hadn't. Not because she threatened anyone. She didn't. But because she didn't need to. The freeze she triggered through Clause 13E didn't just kill one deal. It shook investor confidence across every institution that touched it. One ESG fund paused all bank-related disbursements. 3 proxy advisors sent emergency review memos to clients. And the Department of Treasury, without fanfare, opened a quiet inquiry into whether racial bias within private financial spaces warranted federal ethics oversight expansion. All of it traced back to one moment, one decision, one woman. Back in Cambridge, Celeste didn't flinch at the growing ripple. She was in no rush to explain herself. She had built NIBES on one principle. Power doesn't need volume, it needs precision. So she let the system speak. And the system, finally, was listening. Meanwhile, at Belmont Trust, the internal blame game had turned vicious. Legal was pointing at compliance. Compliance was pointing at regional. Regional was blaming branch staff. And HR, they were scrambling to handle public-facing exposure. At the center of it all sat Heather, the teller who had dropped Celeste's ID on the floor like it was trash. She hadn't been fired, but she'd been moved to back-office operations. No windows, no front desk, no power. She asked for a meeting with senior HR. What she got was a typed memo and a final warning. No one said it aloud, but the truth was clear. She'd cost the firm a $2.1 deal by underestimating the wrong woman. That night, Celeste sat at her kitchen table, flipping through a leather-bound notebook. Inside were dozens of entries. Each one recorded a moment of invisible disrespect. A look, a tone, a door that wasn't held, a voice raised unnecessarily. Most people would have burned out keeping track of every slight. Celeste didn't, because to her, it wasn't about revenge. It was about data. Every story was a data point. Every interaction, a variable. Every disrespect, a trend. You can't change what you refuse to quantify. She'd once told a panelist in a closed-door think tank. Now she was proving it. At scale. In a quiet boardroom in Lower Manhattan, 3 investment analysts stared at the latest memo from the Treasury Department. A single phrase had been bolded. Systemic bias shall be considered an ethics risk, not a PR concern. One of them leaned back, rubbing his temples. This isn't just about one woman anymore. His colleague nodded slowly. No, it's about how many Celestes we've ignored. By Friday, Celeste received a call. Not from Belmont, not from Strathmore, from the vice chair of the National Financial Reform Council. They wanted her to speak privately about formalizing the ethics trigger protocol she had designed. She didn't say yes, she didn't say no. She simply said, "Send the agenda." At 3:18 p.m. that same day, an internal email leaked. It was short, 2 lines. Sent from a junior analyst at Strathmore Union to their legal chief. We never ran her name through Tier A checks. We assumed she was no one. It went viral in private Slack groups. Screenshots landed in DC circles, and that phrase, "We assumed she was no one," became a quiet industry punchline. A warning, a lesson, a confession. Meanwhile, in a co-working space in Boston's South End, 3 Black women founders gathered for coffee. One of them, a fintech founder barely scraping Series A, was telling a story about being interrupted during a pitch. She trailed off, frustrated. The woman across from her smiled and said, "You heard about Celeste Monroe, right?" The table fell silent, and then a spark of hope. Because Celeste hadn't screamed, she hadn't protested in the lobby, she hadn't posted a viral video. She had built the weapon long before the war, and when the moment came, she pressed one button. Celeste had never liked panels. Too many microphones, too much posturing, not enough truth. So when the invitation arrived to speak at a private equity ethics roundtable, she almost declined. But the sender's name changed her mind. Lydia Chen, chairwoman of Everpine Group, power broker, known in whispered circles as the closer behind the curtain. Celeste didn't need the spotlight, but she was curious who else had been invited into the room. She replied with one sentence, "I'll come if it's off record." "And no media," Lydia replied in less than 10 minutes. "It always is." The room was colder than expected, not physically, but tonally. 10 women, 3 men, all non-white, all carrying stories. Some had IPO'd, some had exited, some were still bleeding equity trying to stay alive. They didn't clap when Celeste entered. They nodded, quietly, like soldiers who'd read the same battle manual. Lydia stood. "You don't need an intro, Celeste. We're not here for applause. We're here because you did something most of us only imagined. You shut down a system without saying a word." Celeste sat, crossed her legs, looked them each in the eye. "I didn't shut it down. I just stopped apologizing for knowing how it works." Silence. Then a low chuckle from the far corner. "I remember you," said a woman with silver braids and a Haitian accent. "You were the one who said no to that Leadership in Diversity award. Said you didn't want the damn optics." Celeste smiled. "Still don't." What followed wasn't a panel. It was a purge. They shared stories, coded but raw. A venture partner who asked a Latina founder if she needed a translator. A boardroom that insisted on white-presenting spokespeople for investor decks. An African-American CTO who was cut from the final IPO photo because the lighting wasn't ideal. No one cried. No one raised their voice. Because they were past that. This wasn't grief. This was documentation. Midway through, Lydia turned the table back to Celeste. "You triggered Clause 13E like it was a reflex, but most people don't even know it exists. Why now?" Celeste leaned forward. "Because I'd written 1,000 memos, had 100 closed-door meetings, sat through 24 ethics workshops that changed nothing. So this time I didn't ask for change. I logged in and issued consequence." One woman whispered, "Damn!" Outside the glass walls of that penthouse meeting room, New York kept moving. Traders were chasing the next quarterly gain. Lobbyists were redrafting talking points. And inside one corporate tower, Belmont's crisis team had just received a memo from their insurance underwriter. The subject line: Reevaluation of ethics-linked coverage eligibility. The subtext was louder, because one woman changed the risk model. Back in the room, someone brought up NDAs, non-disclosure agreements, the silent chokeholds, the contracts that gagged truth, the shields for behavior no press release ever revealed. One woman, Asha, a fintech founder from Oakland, dropped her voice. They made me sign one when I was 23, after my seed round imploded because a board member touched me, said I'd lose my founder credibility if I spoke. Celeste didn't flinch. That's why I didn't send an email. That's why I didn't go public, because public can be silenced. But a flagged system, you can't unfreeze that. Lydia nodded slowly. You didn't just write policy, Celeste. You created an immune response. Celeste glanced at the folder in her lap. Inside it were drafts. She'd begun building something called the Silent Ledger, an encrypted ethics trigger registry, allowing women in power to flag misconduct across partner networks anonymously, but with verification, not to cancel, to warn, to trace, to connect the dots before another two-arbiter deal tried to bury its bias under corporate polish. At 3:17 p.m., as the meeting closed, Celeste stayed behind. One woman approached her quietly. Young, maybe late 20s, nervous. Ms. Monroe, my company's about to get acquired. One of the VCs on the table was part of that Belmont deal. Should I be worried? Celeste didn't ask which one. She simply said, look at who they ignored when it cost them nothing. That's who they'll exploit when it costs you everything. The next day, headlines shifted. No longer about ethics freeze. Now it was institutional oversight in private capital. The media still hadn't caught up, but lawyers had. And buried in the back pages of a legal blog, a new phrase entered the corporate lexicon: Monroe threshold. The unseen limit of tolerance before ethical systems activate in silence. That night, Celeste walked through South Boston alone. No entourage, no security, just her coat, her thoughts, and the same silence she'd always carried like armor. A block from her apartment, she passed an old woman sitting on a stoop, watching the wind whip through the narrow street. The woman looked up. You're the one from the papers, she said. Celeste smiled gently. Maybe. The woman laughed. Don't play coy. You made them pay without even raising your voice. Been a long time since I've seen that done, right? Celeste paused. It wasn't about making them pay. It was about reminding them someone always sees. The first official request came in at 9:04 a.m. It wasn't loud. It didn't arrive with press, paparazzi, or TV trucks. Just a single encrypted file sent from the Office of Federal Financial Governance. Subject: Request for Strategic Ethics Framework Review. Monroe Protocol. Draft. Celeste read the message once, then again. Not because she was surprised, but because she wasn't. She had spent 2 decades building systems for people who didn't want to admit those systems were needed. Now, suddenly, everyone wanted to know how it worked. Across the country, meetings were quietly being called. In D.C., the Senate Ethics Committee held a closed-door session marked only as Private Reform Advisory, Fiscal Discrimination Patterns. In New York, 3 major banks convened emergency ethics briefings, not to apologize, but to get ahead of regulatory fallout. In San Francisco, a coalition of tech investors began screening their own portfolios against internal equity scores. Many were stunned by how low they ranked. None of them mentioned Celeste by name, but every chart, every projection, every heat map of reputational risk, her fingerprints were everywhere. At her office in Cambridge, Celeste sat in silence as her team gathered around. Not lawyers, not PR people, not fixers, her real team. A data architect from Nairobi who had fled a government suppression unit. A Latina systems engineer who once hacked a payroll discrimination algorithm for sport. a trans ethics auditor who helped expose wage gaps in a national nonprofit without ever setting foot in court. They didn't ask if she'd respond. They asked, "Is it time?" Celeste nodded. "Let's publish the framework." They called it the Monroe Ledger. Not a system of punishment, a map of accountability. It didn't rate companies. It recorded behavior. It didn't name names. It coded patterns. It didn't demand apologies. It tracked decisions. For every missed promotion, for every seat reassigned, for every ID dropped and every voice dismissed, it gave those moments a place. Because data remembers what pride tries to bury. By Thursday, the ripple was undeniable. The Financial Oversight Bureau, a notoriously slow-moving agency, issued a public statement. "We recognize the need for third-party ethics verification in private financial infrastructure. We are reviewing the Monroe Ledger as a model of interest." That sentence, it shook more boardrooms than any class action lawsuit ever had. Because it wasn't just about one merger anymore. It was about a federal-level shift in how silence could be measured. Back at Belmont Trust, the atmosphere had changed completely. Executives were being reassigned, not fired. Of course not. That would be too honest. But offices were being cleared quietly. Certain staff were pursuing new opportunities. And inside the compliance war room, a phrase was being repeated like a nervous tick. "We didn't know who she was." That lie couldn't hold anymore. Because now the system did know who she was, and it was aligning itself accordingly. Meanwhile, Celeste kept moving. She refused 3 interview requests. She declined a documentary offer. She didn't write a viral thread or hire a speech coach. Instead, she booked a train to DC and carried with her one leather-bound folder, the same notebook where she once recorded every moment of invisible harm. Now it held blueprints, amendments, cross-agency recommendations, and a handwritten title on the front, Ethics Without Apology. Her meeting was with Senator Miriam Blake, chair of the Subcommittee on Financial Equity Infrastructure, a veteran, a bulldog, known for grilling CEOs until they sweated through tailored suits. She offered no small talk. "I've read the summary. You froze 2.1B without a press release. That takes more than policy. That takes spine." Celeste offered a calm reply. It took being ignored for 20 years. That was the training. Senator Blake smiled. "For the first time all week, walk me through your recommendations. Slowly. I want to make sure the people who didn't see you before don't miss what's coming next." By the time the train took her back to Boston, something had shifted. The system wasn't resisting anymore. It was bending, not by force, but by design. Like it had finally realized what Celeste always knew. Justice moves slowly when built by people who never had to run. 2 weeks later, the first official policy paper dropped. Title: The Monroe Framework, an ethics-based approach to financial oversight in private institutions. It outlined 3 things. Behavior-based risk triggers, not based on lawsuits, but on repeated internal patterns. Ethics transparency dashboards, similar to environmental scores, but centered on racial and gender equity. Silent whistle nodes, allowing anonymous pattern submissions without NDAs or retaliation. None of this required lawsuits. It required systems. The very thing Celeste had always been told she was too emotional to build. In a quiet moment, Celeste visited her father's grave. He'd been a math teacher in Birmingham, the kind of black man who wore suits even on Sundays when no one was watching. He once told her at age 12, "Don't just survive systems, out-design them." Now, standing there in the cold breeze, she whispered, "I didn't yell, Daddy. I didn't cry. I just made it so they had to look at what they built." And this time, they didn't blink. By mid-morning, every major financial news outlet carried the same footage. A somber conference room at Belmont Trust's headquarters, where their CEO, Richard Callahan, stood behind 2 microphones and a plexiglass lectern. The camera zoomed in on his face, tight jaw, eyes shifting under the glare of studio lights. "On behalf of Belmont Trust," he began, voice measured, "I wish to apologize to anyone who felt disrespected by our staff's actions at the Strathmore Union branch. We failed to uphold the standards our clients deserve and that our charter demands." He paused, cleared his throat. "We are conducting a full internal review. Training programs will be enhanced, and we promise this will not happen again." Cut to a shot of Callahan looking square into the camera, as if the apology were meant for Celeste Monroe herself. But he never said her name. In the control rooms of back-channel finance circles, the reaction was instant and skeptical. On a private Slack channel for senior compliance officers, one message appeared within seconds. "He's sorry he got caught." Another reply, "They're sorry for the optics, not the offense." A third, "Where's the acknowledgement that it was a black woman's ID? Not a client, a black woman." The refrain was unanimous. The apology was for the bank, not for her. Outside, streaming views of the press conference climbed into the millions. A headline on a major newspaper site read, "Belmont Trust apologizes after ethics freeze. Vows cultural overhaul." Yet buried in that same site, on comment boards and beneath social media embeds, a more honest question circulated. If they cared about culture, why'd it take freezing 2.1b to get an apology? Celeste watched it all unfold from her living room in Cambridge. She sat on a dark leather chair, feet tucked under her, laptop balanced on her knees. The television flickered softly in the corner. Her phone buzzed with messages from advisors, reporters seeking color, investors looking for reassurance. She ignored them. Instead, she read Callahan's statement, then reread it, then opened a document she drafted days ago, Belmont Corrective Plan, Draft V.1, and deleted it. No need. This apology wasn't for her plan. It was for their trouble. She closed her laptop and leaned back. They think the problem was an isolated incident. They think words fix it. Her lips twitched in a slight, wry smile. Meanwhile, at Strathmore Union Bank's compliance war room, the same feed played on a muted screen. Behind the thick glass walls, analysts and execs gathered around whiteboards scrawled with bullet points. Cultural overhaul, timeline, new bias training module, vendor RFP due Friday, draft press release for joint apology. One mid-level risk officer shook his head. They're going to do all the right things, but none of it will stick. His colleague glanced up. Why not? Because it's reactive. They're fixing their image, not the system that failed in the first place. Silence settled over the group as they realized no amount of seminars would catch every ID dropped, every dismissive glance. In D.C., Senator Miriam Blake, who had requested Celeste's recommendations, delivered a scathing floor speech the next day. She didn't mention Belmont by name, but her meaning was clear. We cannot legislate the expression of empathy with HR modules and rosé tastings. We must require structural safeguards. Words are insufficient where actions remain unexamined. Her speech circulated through lobbyist newsletters and policy think tank briefings, propelling a new bill, the Federal Bias Reporting Act, which would codify elements of Clause 13E into law. Back in Cambridge, Celeste received a voicemail from Lydia Chen, the closer behind the curtain. If you're free tomorrow, the Reform Council wants you on a panel. Live, public. They want your voice. Celeste considered it. Public speaking wasn't her style, but this time felt different. She called Lydia back. I'll do it, she said, but only if I can speak about them, not myself. That afternoon, her assistant, Ramon, walked into her office. Senator Blake's team wants a sit-down next week, and Ramon hesitated. The New York Times is running an op-ed they invited you to write. Celeste stood. Tell them yes. Tell Senator Blake I have time. And as for the op-ed, she paused, then finished. Put it on my desk. I'll write what needs to be written. Ramon nodded, eyes bright. Understood. That evening, in a small cafe near MIT, 4 friends, women who had shared the penthouse Roundtable, met again over tea. They'd all watched the apology. All felt the same sting. He apologized, said Asha, stirring her chai. But he didn't see us. Words without acknowledgement, added the fintech founder. It's empty. Lydia looked around the table. We need more than words. We need to build what fills the apology's blank spaces. They all nodded. A plan formed in their shared silence. We'll be ready when they ask for real commitments. That night, Celeste wrote the op-ed. It opened with 3 simple sentences. An apology is only as meaningful as the actions that follow. Today, a major bank apologized for disrespecting a client, without naming her. I hope you remember her name when you read about their next cultural overhaul. She ended with a call to arms. Let's demand systems that reflect our humanity, not hollow words that mask ongoing harm. She sent it off at 2:13 a.m. By sunrise, every subscriber in New York City had opened it. 3 days later, Belmont Trust released their comprehensive culture report. It spanned 50 pages and included new ethics triggers modeled on the Monroe Ledger, mandatory quarterly compliance audits by third-party overseers, a publicly accessible client experience dashboard displaying real-time bias metrics. It looked promising on paper, but inside the industry, opinions were split. Finally, some accountability, or just another report to bury. Celeste didn't watch their rollout. Instead, she drove west on Route 128 toward her childhood home outside Boston. There, in a modest house with a creaking porch swing, her mother waited with dinner and questions. "Did they finally say your name?" her mother asked. Celeste shook her head. "No, but they'll remember it." Her mother reached across the table to squeeze her hand. "You made them fix the system, not just apologize. That's more than they deserved." Celeste smiled, looking out the window at the dark silhouette of trees. "I didn't make them do anything," she said softly. "I just built a system that cared enough to notice." And as the cicadas sang outside, she realized this apology was never about her. It was about a world that finally had to face its own reflection. By the time the sun rose on Monday, the unmistakable tremor was felt across every financial district in America. Regulatory calendars flipped as the Senate Banking Committee scheduled an emergency hearing on ethics infrastructure in private institutions. The Federal Reserve quietly circulated an internal memo instructing every regional office to review bias-related controls. Even Wall Street's usual swagger felt tempered, as if the very markets were holding their breath. Celeste Monroe watched it all from her Cambridge office window. Below her, the Charles River glinted in the dawn light. She wrapped her hands around a fresh mug of coffee, black, no sugar, just how she liked it. Then she opened her inbox. Official request from the Treasury Department. Please join the National Ethics Advisory Panel. Draft language from Senator Blake's office. A new amendment to the Financial Institutions Fairness Act referencing Clause 13E. Invitation from the Federal Reserve Bank of Boston to deliver a keynote at their upcoming System Integrity Summit. She paused. For the first time, everything she'd built, every protocol, every ledger entry, was being woven into federal policy. The system she designed was no longer a back-channel threat. It was the framework being adopted. At 10 a.m., a gray sedan pulled up outside the Fed's austere building on Pearl Street. Celeste stepped out, her coat flapping in the breeze. She was met by Eleanor Finch, the Fed's Director of Community and Compliance. "We're honored you're here," Eleanor said, leading her inside. "It's extraordinary how quietly you've transformed the landscape." Celeste nodded. "Systems speak louder than speeches." Eleanor smiled, unlocking the door to a conference suite. Inside, 24 bank executives, regulators, and non-profit leaders were seated at a long mahogany table. A banner at the end read, 2025 System Integrity Summit, embedding ethics into financial DNA. The room fell silent when Celeste took the podium. She didn't offer any rehearsed pleasantries. Instead, she held up a single laminated card. Clause 13E, Active Client Discrimination Flag. "This card sat in committee drafts for years," she said, voice steady, "until someone finally had the courage to use it." She let that land. Silence stretched. Then she clicked a remote. Behind her, a slide changed, showing a heat map in red and orange. "These are the banks that, over the last quarter, recorded the highest number of bias-related flags," she explained. "Any one of these institutions could face a temporary ethics hold under Clause 13E. That's not a threat. It's a guarantee that client dignity is non-negotiable." Whispers spread around the table. Heads nodded, some in reluctant agreement, others in dawning realization. "Our proposal today," Celeste continued, "is to codify 3 elements into every bank's charter. Mandatory ethics triggers. You must report any public discrimination incidents within 24 hours, or face automatic review. Transparency dashboards. Quarterly public reports on bias metrics, anonymized but visible. Silent whistle nodes. Encrypted, irrevocable logs of discrimination claims. No NDAs allowed." She clicked again. The last slide showed a simple statement. Trust cannot exist where dignity is optional. After her remarks, Eleanor opened the floor. Questions came swiftly. "Will this slow down loan approvals?" asked one veteran banker, arms crossed. "No," Celeste replied. "It only slows down misconduct." "How do you prevent bad actors from gaming the system?" another executive pushed. "You don't," she said quietly. "You design for accountability, not perfection. Let the data point tell the story." By afternoon, the Senate draft amendment was updated with nearly verbatim language from Celeste's slides. News outlets picked it up as historic bipartisan agreement on bank ethics. For once, headlines weren't about profiteering or bailouts. They were about fairness, respect, and real accountability. Back in Boston, at Belmont Trust's headquarters, the mood had shifted decisively. The culture report they'd released the week before suddenly looked like mere lip service. Their board met in crisis again, this time to draft their Clause 13E integration plan. Under the glare of fluorescent lights, compliance officers pored over Federal Reserve guidelines, many of which mirrored Celeste's framework exactly. Meanwhile, smaller community banks that had once shrugged off NIBES began scrambling to integrate ethics panels into their bylaws. A popular banking blog ran the headline, "Why Even Small Banks Can't Afford to Ignore the Monroe Model." At MIT's Sloan School, a group of grad students published a research paper modeling the long-term impact of client dignity protocols, predicting a 12% improvement in lending fairness metrics across underbanked communities. That evening, Celeste returned to her apartment exhausted but energized. She poured herself a glass of water and opened a secure video link to her core team. "We did it," said the data architect from Nairobi. "They listened," added the Latina engineer. "They're building it into law," the ethics auditor smiled. Celeste looked around the squares on her screen. Quiet, proud faces. "This is only the beginning," she said. "Now we monitor compliance. Now we ensure it lives beyond the headlines. Now we prove systems can care." They all nodded, understanding that the real work started now. Enforcing. Late that night, Celeste sat at her kitchen table and drafted a final note to Senator Blake. Clause 13E is law. Implementation guidance attached. I look forward to ongoing collaboration to ensure we don't just pass policies, but live them. She hit send and exhaled. As dawn broke again, the financial world awoke to a new reality. Systems bowed, not through lawsuits or PR stunts, but with shared accountability and transparent standards. And at the center of it all was a woman they had once refused to see. Celeste Monroe stepped out of the black sedan onto the polished granite steps of Strathmore Union's headquarters. The late morning sun sparkled off the glass facade, but she didn't flinch. She adjusted the lapel of her tailored black blazer, lifted her chin, and walked inside. Confident, commanding, unapologetic. She had been here before, under the glare of disinterest at the Commonwealth branch. But today was different. Today, she was the orchestrator of change, not its victim. The lobby was hushed as she passed. No marble floors or chandeliers this time. Just sleek modern lines and the muted hum of business as usual. Security glanced at her badge, then at her face. Recognition flashed for a second before professionalism kicked in. They let her through. Upstairs, in a boardroom that usually hosted merger discussions and quarterly forecasts, a dozen executives and legal counsel sat at a long table. Their posture was rigid, their papers untouched. They'd been waiting for her, summoned by urgent invitation. At the head of the table stood Richard Callahan, CEO of Strathmore Union. Beside him was Marissa Green, General Counsel. Both bore the exhaustion of sleepless nights. Celeste entered. No Secret Service, no entourage, just her. She paused at the doorway, met Callahan's eyes, then nodded once. She didn't smile. She didn't scowl. She just walked to the chair at the far end of the table and sat down. A breath. Then she spoke. "I'm not here to punish you." Her voice was calm, low, but carried. The room shifted. Chairs scraped. Callahan swallowed. "I'm asking one question." She leaned forward, folding her hands on the polished wood. "Do you deserve this deal?" Silence. They'd expected fury, a list of grievances, a recitation of all the wrongs. Instead, they got a question. Simple, surgical, impossible to ignore. Callahan cleared his throat. He glanced at Marissa, who gave a slight shake of her head. "Stick to the facts." We believe this merger is critical to our strategic growth," he answered. "It aligns our capital reserves, expands our market." Celeste nodded, her expression unreadable. "But does it align with your values?" she asked. Her eyes swept the table, not accusatory, but seeking. "Values?" Marissa interjected. "Our values are in our corporate charter." "Charters change," Celeste said softly. "Culture doesn't, unless someone demands it." She reached into her folio and pulled out a single page, an excerpt from the Monroe Framework. Clause 13E, highlighted in bold. Active client. Discrimination freeze. Clause 13E isn't a threat, she reminded them. It's a promise. That client dignity matters. Her gaze landed again on Callahan. "You apologized. You launched training. You've promised to never let this happen again, but you never answered the question." She let that hang. Callahan rubbed his temples. Anxiety crept into his voice. We take this seriously. We will integrate the framework into our policies. We'll publish bias reports. We'll establish ethics triggers." He offered a thin smile. It bugged Celeste, not because it was weak, but because it rang hollow. "Actions over words," she said gently. "Not later. Now." A junior compliance officer shuffled forward, pushing a folder across the table. "Here," he said, voice trembling. "This is our draft integration plan. On your desk as you requested." Celeste took it, leafed through quickly. Timelines, metrics, third-party audits, staff training modules. Everything she'd asked for, everything they'd promised the public. She closed the folder and looked at each face in turn. "This is a good start," she said. "But the real test is in the everyday, in whether the teller at Commonwealth would see a black woman as someone worthy of respect. Not a headline. A human being." Another silence. A longer one. Marissa stood, exhaling. "Ms. Monroe, on behalf of the board, I offer this," she said, placing her own business card on the table. If you deem our plan adequate, we'd be honored to continue this dialogue and to rebuild trust. Celeste picked up the card. Blue border, gold lettering. She read it, then looked at Marissa. Trust is earned in small moments, Celeste replied. Not boardrooms. She slid the card back. But I accept your proposal, with conditions. She paused deliberately. I will review your plan line by line. I will approve each clause, and I will hold you accountable. On that responsibility, there will be no freeze. Heads nodded. Relief rippled through the room. But beneath it was a new awareness. This wasn't a battle of egos. It was the start of a contract, an agreement that dignity would no longer be optional. Celeste stood. They rose too, uncertain how to match her quiet authority. Thank you, she said, voice soft. Now, let's get to work. As she walked out, the door closed behind her with that same soft click she remembered from her first visit. Only now it felt different. Not a barrier, but a threshold into something new. In the hallway, a lone security officer watched her pass. He tipped his head in respect, not because she was a celebrity, but because he knew she had changed the rules. Outside, the crisp air was cool against her skin. She breathed it in. No satisfaction, no triumph, just purpose. Because the real transformation wouldn't live in policies or press releases. It would live in the next time a teller met a black woman at a bank counter and saw her as someone, and that someone would never be ignored again. The Department of Justice Civil Rights Division sent its letter at 8:07 a.m., addressed to Strathmore Union Bank and Belmont Trust. Notice of investigation. Alleged violations of Title VI, Public Accommodations Discrimination. Please provide all records related to client interaction protocols, staff conduct reports, and training documentation from the Commonwealth Avenue branch for the past 24 months. It landed in compliance inboxes like a silent bomb. No press release, no fanfare, just a law firm-style header on official letterhead. At Belmont Trust's headquarters, the legal department met in crisis. The same group that had drafted their comprehensive culture report now stared at the DOJ notice in stunned silence. They're calling it a civil rights matter, whispered Marissa Green, her voice tight. We're talking criminal exposure? Another attorney asked. Richard Callahan, face pale but resolute, cleared his throat. Pull every record, every video, every employee file. I want full cooperation, no stone unturned, or this becomes a nightmare. Nightmare indeed. Because cooperation would expose more than one incident. It would lay bare every subtle slight, every dismissed complaint, every unrecorded moment of bias. Meanwhile, the Equal Employment Opportunity Commission quietly opened its own request, demanding witness statements and anonymized survey data. Regional AG offices in Massachusetts and New York were preparing subpoenas for internal communications. The regulatory cascade had begun. Back in Cambridge, Celeste read the news on her secure line. She didn't celebrate. She simply noted it in her ledger. DOJ Title VI investigation initiated. 04-15525 EEOC inquiry. 04-15525 State AG subpoenas. 046625. She forwarded the dates to her core team with one line. Expect public hearings within 30 days. That afternoon, Strathmore Union Bank's board convened an emergency session in its sleek glass tower. The CEO, regional heads, and board chair assembled and watched the video feed from Commonwealth Avenue, over and over. They saw the ID card drop. They saw the teller's indifference. They saw no one intervene. Now they saw something new. The DOJ seal on every investigative headline. We underestimated the civil rights implications, admitted the chairwoman, voice shaking. This isn't just an ethics freeze. This is a potential violation of federal law. The boardroom swallowed hard. They realized the company they once dismissed as mere bureaucracy was now a potential defendant in a federal investigation. 2 days later, in a federal courthouse in Boston, the first public hearing was scheduled. Journalists crowded the steps. Democracy Now! And CNBC vans idled. But inside the hearing room, the mood was oddly subdued. Institutional solemnity replaced rhetorical flourish. At the witness table sat Heather, the teller who dropped Celeste's ID. She was represented by counsel. Her hand trembled in her lap as the DOJ attorney began. "Ms. Jenkins, can you state your name and position at the Commonwealth Avenue branch?" "Heather Jenkins," she replied, voice barely above a whisper. "Teller, were you aware of Title VI obligations regarding public accommodations?" She swallowed. I don't recall." Her testimony, stoned up by questioning, laid bare the gulf between policy and practice. Commissioner questions peeled back layers of scripted training. "Do you recall any diversity training in the last year?" "Yes," she said, "but it was online. I don't think I finished the module." "Were you ever disciplined for conduct toward clients?" "No." "Do you understand how your actions that day could constitute discrimination under federal law?" Silence. Then, I didn't think it was about race." That admission, "I didn't think it was about race," echoed through the hushed room like a verdict. Outside, reporters scribbled notes. Lawyers whispered to colleagues. And somewhere along Commonwealth Avenue, Celeste watched the live stream on her phone. She felt no triumph, but she recognized the power of quiet accountability. The same system she built that day now held public servants and private employees to account. Back in Belmont's offices, as the hearing ended, Marissa Green convened her team. "They'll want compliance plans. Fines possible. Consent decrees, maybe." "How high?" someone asked. Marissa exhaled. "In the millions. Could be tens of millions. And the reputational cost, immeasurable." Callahan stared out the window at the Charles, now gray in the late afternoon. "Do whatever it takes," he said quietly. "Our survival depends on it." But even he knew survival wasn't enough. They needed genuine systems that prevented this from ever happening again. Meanwhile, Senator Miriam Blake introduced the Financial Equity Enforcement Act on the Senate floor. She cited Clause 13E, the Monroe Framework, and the DOJ hearings as evidence of an urgent need. "We owe it to every person, regardless of race, gender, or station, to ensure dignity in every transaction. This bill makes ethical conduct non-negotiable and enforceable." Clerk votes echoed. Bipartisan support swelled. Wall Street analysts updated their models. A federal bill, once a rumor, now marched toward a vote. That evening, Celeste attended a private dinner at the White House Eisenhower Executive Office building. No cameras allowed. She sat alongside Deputy AG Lisa Myers, Senator Blake, and an unexpectedly contrite Richard Callahan, now wearing a simple suit without his customary power tie. "Ms. Monroe," the Deputy AG began, "you taught us a lesson in dignity. We want to ensure it sticks." "Then let's build it together," Celeste replied. "Systems that learn from their own data, consequences that follow their own protocols, and a culture that respects every person, no exceptions." They toasted quietly, not to her, but to the promise of a new era. In Cambridge, at midnight, Celeste returned home. She stepped onto her balcony overlooking the river. Lights from MIT twinkled. The city hummed with promise and fear. She pulled out her ledger one final time. Legislative milestones. FEEA introduced. 04-2425 DOJ hearing public record. 04-118-25 EEOC inquiry filed. 04-15525. She closed the book and whispered, "Let the systems do the talking now." By dawn, the hearings were headline news. Belmont and Strathmore had already released joint statements renewing their commitment to federal ethics compliance. Fines and penalties were anticipated, but so was the broader shift. Banks would never again treat a black CEO as less than a partner. And at the center of it all, quietly, resolutely, was Celeste Monroe, the woman the system once ignored, now the architect of its highest calling. Celeste Monroe didn't appear on cable news that week. There were no viral clips of her walking through a bank lobby, no magazine covers showing her face. In fact, she was almost invisible in the public eye, just the way she liked it. But everywhere you looked, banking institutions were talking about her. In Phoenix, Desert View Community Bank quietly scheduled its first ethics self-audit day. Tellers wore pins reading, "I see you," and managers reviewed security camera footage, checking for any hint of dismissive body language. A compliance memo circulated. In honor of the Monroe Framework, we commit to a zero-tolerance policy on customer disrespect. Report anything you see, no matter how small. In Chicago, the Midwest Credit Union League announced it would pilot Monroe threshold analytics across 15 member institutions. The threshold rated daily customer interactions on a scale of 0 to 100, factoring in wait times, complaint resolution, and anonymous feedback. A press release noted, "This proactive approach, inspired by Celeste Monroe's work, represents a first in community bank governance." Even big players felt the shift. At Capital Core National, a Fortune 50 institution, the board voted to integrate every element of the Monroe ledger into its global operations. Their chief operating officer sent an internal memo titled, "From Compliance to Commitment, Elevating Our Ethics DNA." He wrote, "No more lip service. When a client feels unseen, our brand is damaged. Thanks to the Monroe Framework, we finally have the tools to listen." Meanwhile, Celeste convened her core team in Cambridge one crisp morning. They sat around the exposed brick conference table, cups of coffee steaming. A map on the screen showed NIBES coverage, 38 states in green, 12 more highlighted in yellow, scheduled for rollout next year. "We're going from coast to coast," she said. "By Q3, NIBES will be in every major banking hub." Her data architect nodded. "We've already set up servers in Dallas, Atlanta, and Denver. The cloud instances can handle triple the load." Celeste tapped her pen on the table. "Good. Next, community credit unions. Let them plug in the Monroe threshold too." In Atlanta, Peachtree Mutual Credit Union became the first rural-focused institution to adopt the threshold. Its president, a retired Air Force colonel, explained in a regional finance blog, "We learned that dignity isn't a luxury. It's the foundation of trust. Thanks to NIBES, our members know we respect them as individuals." Back in New York, Regulatory Watch, a respected industry newsletter, ran a cover story, "The Silent Revolution: How One Woman's Ethics Protocol Transformed Banking Culture." They interviewed 3 bank CEOs, none of whom mentioned Celeste by name. Instead, they spoke of the framework and the ledger, praising the clarity and enforceability of Monroe's protocols. No one called her a hero. No one called for parades. Instead, they said, "We saw a need. Celeste Monroe built a solution, and that solution was working." That week, Celeste received an email from Marietta Savings and Loan in Ohio. Its CEO wrote, "I want to personally thank you. After we integrated the ethics dashboard, our customer satisfaction scores rose 14%. More importantly, our staff report feeling proud again, like they're doing the right thing." Celeste forwarded the email to her team with one sentence, "This is why we do it." In Washington, D.C., Senator Blake introduced a new amendment adding NIBES compliance metrics to the Financial Institutions Fairness Act. At the hearing, Blake said, "Ethics can no longer be aspirational. It must be measurable. The Monroe Framework proved that." Applause rang out, muted but genuine. Meanwhile, Belmont Trust had become a case study in corporate ethics courses at Wharton and Harvard Business School. Professors assigned analyses of their turnaround, how a silent freeze led to structural reform. Students debated lines like, "An apology without actions is just noise." They wrote papers on the Monroe Ledger's design principles and the way the threshold forced everyday reflection. In Cambridge, Celeste stood by her window, looking out at the Charles River at dusk. Her assistant, Ramon, handed her a tablet. "Your speaking notes for tomorrow at the American Bankers Association Summit." She glanced at the agenda. Panel, embedding ethical protocols into core banking systems. She smiled softly, not because she craved the stage, but because it was time to move from policy to practice. That night, she stepped into a small conference hall in downtown Boston. The audience filled the seats. Community bankers, credit union managers, policy wonks, even some Harvard MBAs. No TV cameras, no flashing lights, just people who cared. She walked to the podium, paused. "Good evening," she said quietly. "You don't need me to tell you why we're here. You're living it every day. The question now is, how deep will you go? How will you use these protocols to transform not just compliance, but culture?" Heads nodded. The room shifted forward, lean in, hungry. And with that, Celeste Monroe's work spoke louder than any speech. The morning sun filtered through the glass walls of the Raleigh Center Hotel ballroom, catching the crystal chandeliers and polished hardwood floors in a warm glow. Rows of chairs were filled with entrepreneurs, bankers, civic leaders, each there to hear Celeste Monroe, though most didn't know exactly what to expect. Celeste stepped onto the stage. No fanfare, no music, just her, slender silhouette framed by the light. She paused, letting the room settle, then spoke without a greeting. "I won't recount what happened. You've heard the stories." A gentle murmur rippled through the audience. She let it fade, then asked, "How would our world change if we trusted someone the moment they told us who they are?" Silence. You could feel it mid-air, a question so simple it cut through every assumption. Eyes locked on her. Some recognized the gravity. Others leaned forward, uncertainty and curiosity mixing in their expressions. "Trust isn't earned in boardroom optics," she continued. "It's granted at first sight, and either honored or shattered by our actions." She paced slowly, as if walking through their minds. A name, an identity, a life story, those shouldn't be invoices we bill against someone's worth. Heads nodded, some in agreement, others in sober reflection. Behind her, on a screen, brief bullet points appeared. Trust metrics, initial respect, index bias. Incident frequency, rapid resolution rate. "These aren't abstracts," Celeste said. "They're real measures of whether we see each other as people or line items." A woman at the front scribbled notes. A banker in a tailored suit closed his eyes for a moment. A young entrepreneur gripped the edge of her seat. She paused again, letting the question echo. What if trust was the only currency that mattered? A single clap, then another. It built, careful, genuine, until the room was alight with slow, meaningful applause. Afterward, as the summit broke into workshops, Celeste mingled quietly. She spoke softly with a college student who dreamed of launching a rural credit union. She listened as an executive shared his plan to install trust dashboards in his branch. She encouraged a nonprofit leader to pilot the Monroe threshold in community programs. No headlines followed her movements, no selfies, just genuine connections, proof that her question had taken root. Later that evening, back in her hotel room, Celeste sat by the window overlooking the city. The lights twinkled like distant promises. She opened her journal and wrote the question again, as she had at every chapter's start. How would our world change if we trusted someone the moment they told us who they are? She folded the paper into her pocket and whispered, the answer lives in every moment we choose respect over doubt. Outside, Raleigh's night air carried the hum of life. Cars, distant laughter, possibility. Celeste closed her eyes and breathed deeply. She knew the real victory wasn't the policies passed or the systems adopted. It was this, a question that refused to be forgotten, one that would continue to ripple through bank lobbies, boardrooms, and kitchen tables. Because true change doesn't end with a freeze or a law, it begins with trust given at first sight and a willingness to let it grow. If you believe respect and trust can reshape the world, hit like, subscribe, and share this video. See you next time when we dive into real-world ways to apply the Monroe framework.